Welcome back to Your Average Investor, everybody. Today we're going to go over another GameStop and AMC technical analysis. Fundamentals are out the window. All we care about is technicals here for today to see if there's a good buy opportunity in the future of GameStop and AMC. And in addition to that, we've got a giveaway going on. So if you're not already, please subscribe so you can enter that giveaway. It's for $100 to celebrate our first 100 subscribers. And if we hit 300 subscribers before Friday, you have up till Friday to enter. Then we're going to do 3 giveaways for $100 a piece. So all you have to do, hit subscribe on the channel, go to youraverageinvestor.com and put in your email. You can do a burner email as well if you want, doesn't matter. We don't even have a newsletter ready yet, but we are going to get one ready for the future that we'll maybe send 1 or 2 letters out a month on. And that's all you have to do. You'll be entered for the $100 giveaway. And when we hit 1,000 subscribers, we'll be doing the same thing, but for $1,000. It's going to be real fun. So let's take a look at GameStop, look at some technicals, and decide if it's time to start accumulating a position or not. First off, we're going to take a look at the one-day yearly chart. We're looking at a 4-year look-back window here, which should take us back to the original short squeeze. And of course, the reason I want to go back here is because I like having a price line here. We're going to add it right here at this $10 level. This right here in my mind is the absolute buy zone. And you can see that was reflected right here when GameStop moved right back down to that zone before this most recent squeeze. This right here, if you happen to ever see GameStop at $10 soon, again, barring crazy news that might come out and invalidate all of this, that's an absolute buy zone. Now, some interesting sell zones to look at would be right here around the $50 mark. This has been some pretty consistent resistance for the most recent. Other than recently, we got up all the way to 80 actually again in pre-market trading. So I'm going to put another price level here at about $80 because that was pre-market plus these 2 highs. And then of course we have an all-time high up here. We're not going to worry about those right now though. We're just going to look more recently and see what we've got going on. Now beyond these basic price lines, we've got GameStop trading between 2 other important price zones, this $15, $16 zone and this $25 zone. It's sitting just basically right in the middle of it, but it appears to be forming a really nice base. Let me make this a little taller, right at $20. Every day when it dips down to $20 or if it happens to get below, it seems to get bought up really consistently. So that's something that I'd watch for an entry. If I wanted to go long GameStop, I'd be buying at around $20 per share, probably with a pretty tight stop loss, like maybe 18.5. And I'd look to accumulate. And if I wanted to just do some scalping, I'd probably sell around 22, 23, or accumulate at 20 and look for a pop back up to this $25 to $30 zone. Now, another indicator that I love on GameStop usually is the volume weighted average price anchored to a recent low. However, nothing's lining up with that right now. You can see if you look back in the past, these lows have often indicated some bounce zones if you anchor a volume weighted average price. Not always, but you can see sometimes that it worked pretty dang well when GameStop was in uptrends, and then on downtrends it also worked well as resistance zones. So I'm waiting to see if something lines up with either of these volume weighted average prices. Now let's take a look at the scalping, see if there's any scalp opportunities. So yesterday what happened is GameStop kind of pittered off all day, recovered just a little bit, then the last several minutes of the day, big spike up, spiked up again in the after hours before selling off basically all the rest of the after hours and pre-market today. And you can see again, here's that $20 price zone where people are just gobbling up GameStop. If you buy there, right, that's a 10% gain. Buy here, scalp, sell at $22 range. Quick 10%. So I like the $20 price zone. I'll be looking for an entry around that price zone tomorrow for a quick day trade. The other way to consider doing it, of course, is buy at $20, and when it moves up to 22, 23, start selling some covered calls. The premium is exceptionally high right now. 3 days to expiration, call 22, $200. That's crazy talk. I'll take that $200 all day long, and it gives me a little bit of downside protection. So I really like the covered calls, although of course the danger there is if you're looking for the next really big run up and you're stuck in a covered call, then well, your shares get called away. You don't get to participate, say if GameStop goes to $50 a share overnight or something like that. Now, the other way that I like playing GameStop is with volume weighted average price anchored to the start of the day. And let me edit my study here so you can see what this looks like. I'm going to go ahead and edit this to pull these bands out to be about 10%. So I want this to be 10% up and 10% below the volume weighted average price. And I like these bands to give me an indicator of when to potentially play a reversal if GameStop goes too far below, like what happened here, the volume weighted average price. You can see it's dipped all the way down to about 10% below the VWAP anchored to the day, and then it recovered just a little bit before this nice spike at the end of the day. So if you use this as an opportunity to buy, you've got a nice move up. You can set a trailing stop or just hold your position if you want, and then you get to collect some nice upside when those big spikes hit. And similarly, you could have played the upside the same way. You see that it's crossing above this, and you play a dip back down. Eventually, you would have gotten stopped out of that unless you decided to hold overnight, and then you would have had a nice little gain if you decided to short AMC and become the enemy of retail traders everywhere. So interesting. Oh, excuse me, GameStop, not AMC. Interesting to watch. I like the $20 price zone. I like the 10% above and below bands, and it's about the same for AMC with the bands. Let's look at some price zones though on AMC for a little bit of a technical analysis. Number one, we've got this $4 zone where there was a nice base forming before the most recent dip all the way to all-time lows. So I'm excluding this right now just because if $4 cuts, this is likely going to be a thing. So that's your stop loss, right? If you're buying now, $4 is your stop loss, because if this cuts, then we're going to probably see a $3 or sub $3 price on AMC again. But what I do like about AMC is it had a really nice catch off of the volume weighted average price. So you can see here it's anchored right here to the low, and we caught right here about 4.25, 4.3 before moving up just a little bit. And there's a little bit of resistance here sitting at the $5 area. If this $5 area breaks, nice move back up to 6.5, maybe 7, and then we'll see possibly some move ups to 8 again after that. Really what I'm looking for on this though is to see if we start pushing through this open interest. So this open interest is absurd, right? 3 days to expiration, we've got 30,000 contracts here, 15,000 here, 37, 18, 12,000. You can see it just goes on all of these option chains. So what I'd be looking for is to see if we break above 5, that's a lot of open interest that's now in the money. And that would be a very interesting inflection point. Same right here, this 6, 5.5 a little bit, but this call 6 right here, tons and tons of volume, open interest now just reached in the money, and that will likely drive a little bit of a gamma squeeze further up. So that's where I like this 4.5 range as an accumulation zone, probably with $4 as a stop loss if it breaks below $4, and looking to play the upside to the $7 to $8 range there. And if you look again at the charts on the 1 day, I'm going to pull this back a few more days actually. We're going to look at about the last 5 days here so you can just see what this looks like, right? So here we have that $5 range that was acting as support, and then that got cut through, and ever since then it's pretty much acted as resistance. You can see some resistance there, more resistance here at that $5 range. Look at that, to the penny, the $5 range acting as resistance, and notice this minus 10% acting as a pretty good support for a little bit of a scalp play there. But even up until these last couple days, right, we did have a little bit of a spike above today where the price had a false breakout above $5 before moving back down below. So again, if I were to trade AMC, and I like the setup okay. It's not my favorite setup, but I like the setup okay. I would be accumulating down here, and then I would be selling anytime it comes up to the $5 range if I'm scalping. If I'm looking to day trade and swing this, then I'm probably going to be accumulating down here, looking for a play that moves back up into this $7 range. And that's where I would be very careful about a big sell-off again, up in the $7 range. I'd probably protect myself with either a trailing stop to make sure I capture some profits, or possibly selling, maybe 2/3 of my position. This is a really interesting way to play if you want to de-risk your position. Say you've been accumulating a whole bunch at 4.5 or 4.6, just for easy math. Let's just say you bought 1,000 shares at $4.50 a share. So you spent $4,500. And then the price, let's say the price moves up to $7 per share. So you now have $7,000 worth of AMC. Well, what I would do right then is I would sell $4,500 worth of my stock, which would leave me, of course, with $2,500 worth divided by $7 per share, or roughly 350 shares. So I'd sell the rest, keep my 350 shares, And what's happened now is these 350 shares are 100% risk-free, which means I can diamond hand those forever and I will not lose money because I've already captured back all of my original cost. So if I was accumulating here and the price spiked back up into the $7 range, that's how I would play that. I think it's a decent setup. I don't know if it's my favorite setup, like I said, but I think it's a decent setup. The other thing that's interesting is notice these volume candles here. Three really big volume days, and then since then we've had decreasing volume, right? So you see this volume's decreasing down here. If this volume starts surging again, that could be an indication. What if you see volume moving up with the price or down with the price, right? So if the price starts moving down and volume goes up, I would wait a little bit. But as long as we're basing here on steady volume, I think this is a good indication to get in and look for a play up to the $7 range. Full disclosure here, number one, I'm not your financial advisor. This is not financial advice. Take your own risk, do your own research. This is not me recommending anything that you specifically should do. This is entertainment purposes only, and I'm telling you about what I think about the stock. Full disclosure number two, I own shares of AMC and I own shares of Gamestop. My Gamestop shares I've currently sold a covered call on. It's a call 16, so I'm actually in the money on that, and it will probably get called away by the end of next week unless I decide to roll it. I've also sold cash secured puts on GameStop, and I'm considering cash secured puts as well as buying more shares of AMC. Love to know how you guys are playing this. Again, if you haven't already, hit that subscribe button, support the channel, hit those comments up below. Let me know if you've gotten the entry already. If you're in the entry, let me know, because I love seeing when people throw themselves in the entry so we can give away more money, and we'll catch you next time.